Eric Muathe, Muathe.com, with the weekend world market analysis, and I'm recording this with about 1 hour to go before the US market closes here. Dow down about 115, 113 points. And if we take a look at how world markets closed, as we see, some of the European markets closed down significantly. For example, the German market was down 2.2%. The French market was down 2.53%. If we take a look at Asia, we see that overnight the close on Friday is pretty much an unchanged day, with Japan unchanged, China unchanged, and Hong Kong unchanged. We see that Australia was up about 1.1%. If we take a look at the Americas, we see that Brazil is down before the close here on Friday, and we see that Canada is also down slightly, down 0.57%. So let's go to the charts. Before we take a look at world markets, just want to point out here that S&P 500, with about half an hour to go before the close, we see that we haven't broken this trend line on the daily, and I think as long as this trend line is holding on the daily, I think that S&P 500 should be fine even despite Friday's drop, and we see that we are still holding above the 50-day moving average. So as long as the market is holding above those two levels, the 50-day moving average and also this upward sloping trend line on the daily RSI, I think the market should be fine even with more of a pullback day to day. As long as this line is being respected by the market, one should expect this market eventually to bounce and recover. If we take a look at the Canadian market, with about half an hour to go before the close, we see that we are trading also just like the S&P 500 back to test this trend line on the daily RSI. As long as this line is holding, which is exactly what it's doing right now, one can assume that Canadian market should also be fine. For now, it's only when it breaks below that trend line, so a break of that trend line, one could see that being a sell signal. For now, we haven't seen that sell signal. One has to assume, given the market is coming and holding here, that more than likely it would make sense if it holds, that we have support, which might suggest that the market could also move higher. Also, we see that it is holding above a nice, steady and flat looking 200-day moving average. If it can find support around here day to day, looks like the market, in my opinion, look to move higher. Let's take a look at the hourly for the Canadian market. We see that the TSX has come here, seems to be showing support on the hourly, and while it's doing that, we can see that the RSI is holding on this line where it's been finding bounce territories. As you can see, even like take for example this area here, the market did bounce off that level, and again we bounced here, which was this lows. So recently we came here, we held on the line, which is the low here, and we continue to making improving highs or higher lows in the market on the hourly, and the price is showing some stability. I think this suggests that day to day, hour to hour, Canadian market is also looking to do what the SPX could do, which is bounce. If we take a look at the EWZ, the Brazilian iShares ETF, we can see that it's had a down couple of weeks here. In fact, ever since it hit the declining 34-week moving average, we've seen some resistance, and we've also been discussing over the last couple of weeks the fact that it came to this break level here around the 50. So this break point on the weekly RSI corresponds coming off the highs, and we can just draw a simple line which happens to be around the 50 level, which gave us double top on the weekly RSI. That resistance is good enough to have brought the market down over the last 2-3 weeks. If we take a look at the daily for the Brazilian market, we see that on the daily, even with a down trade on Friday, it is coming back to test the 200-day moving average. I think somewhere around here after this decline could be a level where it could stabilize. The reason why I say that is if you take a look at the daily RSI, all you have to do is draw a simple line connecting the lows going back to about September, October of last year. On the daily, it connects all these lows, and now we seem to be holding above this line. So just like the Canadian market and like the S&P 500, if this line can hold, then the thinking here is that more than likely might suggest that the next move for a swing trade is higher in the Brazilian market. And of course, just like the other markets, if we happen to break that trend line, and also if we break below the 200-day moving average, then of course that is going to suggest that not only are we not going to bounce, we are actually going to be beginning another leg to the downside. For now, I think we end the week here with what looks like support at the 200-day moving average here, and also support on this RSI lows line. If both of them hold, one can expect the market to have a swing trade to the upside in the coming days, maybe even in the coming weeks. Now let's take a look at two European markets. We begin by taking a look at the French market, and we can see that if you take this line that we drew during the last weekend analysis, which was the line that gave us the breakout level here, once we broke out above the line, we had a nice run, and that run is what took us to new highs. So this run here began right here when the RSI broke out, and we made a point of noting that if the market had come back to back test this line over the last couple of days, staying below this line was always going to be a little bit testy for the market, and we see a big drop on Friday, and that drop to me is not that destructive. And one of the reasons why we had a big drop is because we moved below 50 on the daily time frame on the RSI, and that drop below 50 I don't think really breaks the market, because we have this line of support like that. If you take the lows on the daily RSI like that, you can see that until the market breaks below this support line, any pullback back below this line, if it holds, is just sideways action before potentially the next move higher. So right now we're looking at the market holding this line, just like we've seen in other markets. As long as this line is holding on the daily RSI, market should look to bounce. We take a look at the German market also on the daily. Big down day on Friday, and also you see that there was resistance on the daily RSI. If you draw it like that, so before the drop on Friday, market had come back and hit this level, which is the top line on the daily RSI. And of course now, depending on how things settle out, if the market can still hold above and bounce on this lows line, any bounce on this lows line might suggest a market that is still healthy and could actually be looking to go higher. Let's take a look at the Russian market by way of the RSX, and we see here 2 down weeks, which makes a lot of sense, because ever since it broke down off the highs here, the RSI had broken below this level right here, and so we can draw a line from there to see any future sell signal. On the weekly RSI, we can see that we got exactly that over the last, let's call it 2 or 3 weeks ago. That uniform activity above the line back below it was a sell signal. So yes, the pullback does make sense, but now you can see it's coming back to test the 34-week moving average, which is an area where it could find stability after 2 weeks of a pullback. We also see the line connecting recent RSI lows. If you draw it like that, if this line can hold, then one can expect the Russian market also to recover after those 2 weeks of a pullback. Take a look at the daily RSI, and we can see that there's a recent movement off the lows here, which began during this RSI breakout. So somewhere around here. So we broke down or broke out and started the movement from this entry, corresponds with these lows here. Since then, the market hasn't closed lower, actually gone on to record higher prices. So we can draw a line from here like that, and you can see that the market on the daily has come back to test that line. If this holds on a day-to-day basis, keep in mind we are trading at the intersection between the 200-day moving average and the 50-day moving average. So you can see the 50-day moving average is going above the 200-day moving average. That tends to be a bullish signal. So the market has come back to test those two moving averages. And also, if this line can hold on the daily RSI just like it did here during these lows, the interpretation here is that, and to keep it consistent with other world markets, more than likely, even though it's looked like it could break down, I think here my conclusion is that more than likely this could hold and push the markets higher. We can see that on Thursday, China had a big drop, down 6.5%, But if you take a look at the daily chart, really nothing that destructive on the RSI, because we are still trading above this line of support, which has been previous levels where the market has pulled back to and held. You can see the lows here during this pullback in price. RSI held here during this pullback, and also you can draw the RSI line like that, which gives you the level where it's been showing support, for example here, which is during that movement lower, and also during this period here. All to say that even though we had a big drop, nothing has really destroyed the Chinese market. If you take a look also at the weekly, you can see that the RSI, despite the huge drop, continues to trade above 69.1, which is a sign of strength. So the market, even though it had a big drop, has not broken down, continues to trade above 69.1 on the weekly RSI. Something it's done, generally speaking, it's held above 69.1 since August of last year. So it continues to be strong. If we take a look at the monthly, confirmation of strength can be seen by the fact that, as we can tell here, the RSI has still and continues to trade above 69.1. So yes, pullback day to day, but on the monthly and the weekly, there's no signs of let up, and the Chinese market continues to be strong. Just like other markets, if we take a look at the KOSPI, we can see that if you draw a line connecting the lows, it is also coming to test this line, just like other world markets have been doing over the last couple of days. So if that holds, one can expect a pullback, a push higher or a rally from here. This also happens to be a level where it is testing this line, and this line is critical because this is where it broke out in the RSI. So there was an RSI breakout here, and this breakout in the RSI began this nice move off the lows, and since then the market has gone on a major bullish run. So holding above those two lines, A, this green line here, and B, the blue line, would suggest that even the KOSPI is setting up to move higher in the next days, next couple of weeks or so. As long as the line is holding, otherwise if we break below that line, so of course if we wake up one morning and we see that we've broken below those two lines, then and only then can we turn bearish. Otherwise right now, seems to me like this market could also be showing signs of a bounce. If we take a look at Japan, we can see that we were anticipating a negative line or divergence line here. We were anticipating resistance somewhere around here, but the market has broken through that resistance, and we can see that it continues to trade at new highs. So it's one of the few markets, I think it's probably the one market that is trading at or close to its highs. So we can see that Japan continues to trade well. If you take a look at the weekly did confirm a second week above the previous recent weekly closing high. So that's a good breakout, indicating that even with pullbacks, the Japanese market continues to trade well. We also see that the RSI did recapture that level above 69.1. Again, as long as the markets are moving back and trading close to 69.1, these are strong markets that could see even higher prices. If we take a look at the Australian market, which had a nice week, as we can see over the last couple of weekend market analysis videos, we've been talking about this line. And why this line is because this is where it began this nice movement. The RSI did move above that line here, which is off the lows. Since that point, the market went on to record higher highs. Even so, with this pullback recently here, what the market is doing is back testing this level here. And we saw that the market did come here and show double bottom support. The thinking was that with that support, the market was going to move higher. It's done so over the last week or so. And we can see that this is the line of resistance on the daily RSI. And with Friday's 1% move, we can see that it continues to trade above this line. So I would suspect that this is good enough to indicate that, generally speaking, even the Australian market looks to rebound after this steep drop over the last couple of weeks. So I would anticipate a nice move higher as long as the market is holding above the previous RSI resistance lines. Let's take a look at the Indian market, and we begin here by looking at the monthly, and we can see that the monthly continues to look good based on the previous breakout level here. and the fact that we continue holding above that line, showing that this is a nice area where we were expecting support. Right now we are getting support, and so generally speaking the market looks good. If it can continue holding above this line here, it generally means that the market is now back on rally mode. And if this market is to break out down the road, the level to watch is 89.20.75, which is the previous and the current all-time monthly closing high. So the market does need to move above that level if it is going to record fresh monthly breakout. So keep that number in mind, 89.20.75 on the Nifty, and as long as we are bouncing on this line, the market should be generally trading well to the upside. Now there's another view which I would like to mention here, that if we take the ultimate breakout, which is actually a little bit lower, so this entry began this nice move early on in 2014 during this breakout, somewhere there. So we had a nice breakout here which corresponds with this RSI breakout there, and so we can draw a line from here. Let's draw it something like that. You can see that as long as the market is holding above this line, I would say that we are still in a good trending market, even if it comes back to test this line. So the level, another level that the market needs to watch for down the road is this line here, based on the ideal entry coming off the movement and the breakout early on in 2014. So for now the monthly does look good. We take a look at the weekly, which spent most of the week trading below RSI 50, but by the end of Friday we can see here it managed to hold above 50, which is great. So as long as the market is looking like this, and as long as, if we go back to the charts we've been looking at, go back to 2008, draw a line connecting the lows like that, we can see that as long as the market is holding above this support line on the weekly, we are generally in a good market. On the weekly, we also need to see the RSI hold above the zero line, or at least the MACD, excuse me. We need to see the MACD hold above the zero line if the market is to continue looking good. But for now, the staying above 50 level on the weekly RSI is a sign of strength, having spent most of the week below that. If we take a look at the daily, take a look at recent data, we can see on the daily the MACD is looking like it wants to move back above zero, which is something we've been talking about throughout most of this week, that it needs to hold and move back above zero if momentum is to return in the market. Just like you can see here, momentum returned in the market with a nice move higher once we moved above the zero line on the MACD. Again here in October of last year, momentum returned in the market doing somewhere here after moving above zero on the MACD. So holding above zero is key. If it can recapture back above zero, then the market could be looking to build on to this recent move off this recent lows. Now one thing I would like to point out here is on the daily, the market's come back to a relatively short-term test point, and I'll show that on the daily. We take this break. Now this break was critical. This RSI break here was critical in killing this current market run here, and since then we've been trading lower. You can see that that's the high, and so if we draw a line from here like that, you can see that the market has previously had uniform activity above the line and back below it, which is what I call uniformity. So this is the uniformity line, and because this was uniform action, you can see that we had a pullback here, and we came here, we touched the line again with uniform action, which is here on the daily. We had a pullback, and now we are back to this level here. So quite frankly, if the market wants to move higher, it needs to trade above that line of resistance. Otherwise, if this becomes another instance of resistance, then we are going to be looking at a daily chart that might be suggesting that the market wants to go down. So this is a level to watch, in my opinion, on the day-to-day basis. Market needs to clear that if it's going to do well for bulls. If you're a bear in the market, you'd like this to be resistance and for the market to start correcting. Quick look at the hourly. On the hourly, we can see that our thinking coming into Friday's session that the market was looking to bounce based on this support line on the hourly RSI made sense, and this support line connected recent lows, as you can see here, and also through these lows here. So once the market held there, the thinking was maybe the market was looking to go up, and that's why we had that nice move on Friday, about 1% higher. And we can also see that based on the fact that the MACD on the hourly was coiling and pointing like it was going to move above zero, suggested a bounce in the market. So that was a good idea based on that chart. Also, the fact that we made lower lows on the hourly chart and improving technicals on the RSI suggested a bounce, which is what we got on Friday. Okay, so now what next? I think if you take a look at where the daily is trading and the potential for resistance, we can see the same thing on the hourly, which is the break here. Actually, if we go back a little bit farther, so let's go back a little bit farther. Here we go. All right, so on the hourly, we go back to the highs here. We can see the RSI broke down right there, and that break, we can draw a line, simple line like that. And this line gives a lot of information in terms of a break point. Again here, we broke below the line, which was the high here. And since then, this has become resistance, market pulling back slightly on the hourly charts. Eventually, we also broke another trend line here and a break right there, which was this break recently. So we are coming back to test that line. So for the market to move higher, it needs to trade above that line. Otherwise, if this becomes resistance on the hourly, that also indicates that more than likely we are due for a pullback. So yes, the market does need to take out the resistance on the hourly chart and also the resistance on the daily chart. Eric Muather with Muather.com. Enjoy your weekend. Good luck. Peace and blessings. Woo!